It is Friday, August 14th. We're halfway through the trading session. Hello, traders. I wish I had some exciting news for you, but we are watching the paint dry. This is not a surprise to us. This is what I've been writing about. You've heard me mention this over the course of the last couple of weeks. We are in the dog days of summer right now. We have all of the economic releases behind us, which incidentally, we did have a couple of releases today. We had retail sales in the U.S. We're up 1.1%. That is not showing pent-up demand. We weren't expecting a big number because the coronavirus is still weighing on consumption. What's more concerning is that China released their retail sales. They actually dropped 1.1% when growth was expected. Their industrial production was also light. The reason that that's more significant is because China reopened their economy in April. So they're struggling. We've seen very low imports into China, which tells us that the future demand might be pretty light. They did have export growth of 7.2%, but that was mainly due to medical supplies. I believe that the market is going to flatline here. We've tried to take out the high for the last couple of days. Let's go into that daily chart, see what's going on there. You can see here how we had an intraday reversal, and this is back on Tuesday, but Wednesday the market was able to erase all of those losses and get back up to that high. We haven't been able to get through that 338 price point. We've bumped up against it a couple of times. We're not going anywhere. You can see that that is the prior all-time high. There are some issues right now. We've got Congress basically throwing in the towel and saying that there is not going to be a stimulus plan. They're going to address it when they come back in September. If Trump had not used his executive powers last weekend to extend the unemployment benefits, the market would have been down this week. It's still continuing to tread water, but with every passing week, if we start getting a rise in initial claims, which incidentally, initial jobless claims yesterday came in around 980,000. That was the first time in 5 months that we've seen a number below a million. But that's still a lot of initial jobless claims. It's almost a million at a time when the economy was supposed to be recovering. Again, coronavirus is still weighing on this economic recovery. Q2 earnings came out and profits were down 33%. Okay, investors can kind of look beyond that and say the economic recovery is going to be on track in Q3, so things will gradually improve. It hasn't happened. I think there's lots of room for disappointment. Valuations are stretched right now. I think it's going to take quite a while for stocks to grow into their current valuations. So two scenarios could play out. The market flatlines, it goes nowhere, and over the course of the next 3, 4 months, 5 months, gradually stocks grow into their current valuations. Or the other possibility is that there is a pullback over the course of the next few weeks. I think that is the more likely scenario. The market has a way of sending a message to Congress. It's not happy that the $1.5 trillion stimulus plan did not get approved. I think you're going to see some profit taking in here. To me personally, the upside rewards are much smaller than the downside risks. In terms of this time period right now in August, this is the quietest period of the entire year, and it happens every year. Why does it happen? Well, we're past Q2 earnings. There are very few earnings left, so we won't have that to spark any kind of trading activity. The economic releases are behind us. We won't get any big economic releases for another few weeks. You have no politicians in DC, so the political news front also starts to get pretty quiet. It's very, very dull. People are taking their vacations before their kids go back to school, and so you don't see much in the way of volume. That means that you see compressed intraday ranges and flatlining just like this. There aren't any market drivers right now. So as a trader, what does that mean? It means that you have to pull back your trading activity. I have very, very, very little overnight risk exposure. I think that cash is the best place to be because if I look at the next 2 or 3 weeks, I feel that I've got an opportunity to get in at a better price than right now. And if the market simply treads water, that's okay too. I haven't missed any upside, but I have 3 weeks more of information so that I can keep tracking initial jobless claims, and other economic data points. So from a swing basis, I've got nothing on right now. I do not like anything from a swing trading standpoint. I'm going to wait to see if the market pulls back. If it does, I'll wait for support. I'll be able to gauge how heavy the selling pressure is, and then I'll be able to make a decision on when it's time for me to go back in and sell some out of the money bullish put spreads. Also, in any kind of market dip, I can evaluate and I can gauge relative strength, and I can find those strongest stocks that are holding a very strong bid. That'll help me increase my probability of success when it is time to sell out of the money bullish put spreads. On a day trading basis, right now, I had my first losing day in well over a month. It happens, and I'll show you a couple of stocks that I traded. They look good to me. NVAX was a mover. I was looking for anything with a pulse today. We had some nice long green candles closing on their high. I got long in here, and then support started to fail. The stock pulled back. Doesn't look like much of a loss, but it was a pretty good ding. Fortunately, I've been trading very small size, and I've been mentioning that in my pre-open market comments, which, by the way, if you want to see my pre-open market commentary, look in the description section of this YouTube video, and you'll see a link so that you can follow me on YouTube. Typically, I would post a chart on YouTube. Much quicker and easier for me to do that than it is to do these videos. So if you also want some early stock picks, again, follow me on Twitter. Haven't posted any today. Haven't seen anything that's even remotely compelling. Now, NVAX did set up for a decent short in here once we saw these tails above body, and we had this upward sloping trend line that was broken, and the selling pressure was very steady. This is a trap. You see this nice gap higher and what looks like really nice price action, and then everything falls apart. Another stock that I lost money on today was INO. Very similar. Here we go. Go, go, go. Not so fast. So I got out of that. AMAT I also lost money on. Same thing. Here it comes. Looks great. Here, bounce 1, bounce 2. I bought right in here. Uh-oh, long tails above body. Got out here. Nope, it's continuing to sink down. A little short in here. I don't know. You get short here when it takes out the opening price, and then you get one of those right there. When we go into that 5-minute chart of the SPY, it is random red and green candles all over the place without any real pace. We had a small upward sloping channel in here that formed, but there's just absolutely nothing to trade right now. One of the hardest things for traders is to do nothing, because you're always trying to make something happen, and it's just not there today. So for those of you who are looking for trade ideas, please stop watching the video now. I'm not going to have any for you. I don't see anything compelling. I'm going to see if we start getting something, anything that looks good into the close today to see if there might be a lotto trade for us, but I'm not expecting that. Those work best when you have a nice, strong market tailwind. The ideal situation for us today would have been if we had a nice rally up to the high, challenged the high, pulled back slightly, not far from the high, and then in the last hour of trading made a charge at that high with a breakout to the upside. Yes. Then we would have had the market momentum that we need. We would have had a breakout, and we would have had the possibility to buy some calls on really, really strong stocks that were also grinding higher. I don't see that happening in the last hour of trading. We're probably going to chop around just like we have so far today. So for those of you who like to trade S&P 500, you can try and force something if you are a scalper. On a day like this, you know that the 1OP indicator is what we use to tell us when to get in and when to get out of positions. Today, here's what it did on the open. Nada. So for the first 2.5 hours of trading, it was telling us something. It was telling us, don't trade. If I go into a 1-minute chart, it gets more granular, and in a sideways market, you can see some trading opportunities. So you get this peak right in here. You'd have a nice opportunity to get short, wait for those tails above body. You could get short in there. Got another cross right in here. You can see how this high is actually above the prior one. Now you should be watching for a possibility to short up in here, but you got to wait for these inverted hammers right here like that. Okay, that's a pretty good opportunity to short. You would have your stop at the high of the day. Okay, everything's still intact. Now you get a little bit of a dip. You get your 1OP bullish cross right in here. Got a bearish red candle here, followed by a bullish engulfing candle. Okay, it's time to take profits. You don't want to see a nice long red candle like that be erased by the next candle. That's where you want to get out of the position. And you also have a bullish cross on the 1OP indicator. Okay, so you can get in here and you could probably get another scalp off for a couple of S&P points, maybe 3 S&P points. So yes, the 1OP indicator can be used on very, very quiet days like this, but why force it? You know, I like to fish, and fishing is a lot like trading. And there are certain times when it's just not worth going out and fishing because you know the conditions are not right for it. And why waste time sitting in a boat when I could be doing something else? And there's a fall pattern that sets in for fishing where you start getting into cooler water temperatures, the weeds start dying off, the oxygen level is low, the fish move out, and they wait for the lake to be turned over. There's a thermocline that sets in. The point is that until you have that fall turnover and the water is completely mixed so that you have continuous temperature throughout the water column, fishing is horrible. You can go out and pound the water all you want. You're not going to catch many fish. But once that happens, that transition happens, the fishing gets really, really good. It's the same way with the market. We're going through a similar time period right now where you can go in and you can try and grind out profits all you want, but it's going to be a lot of effort for nothing. The best thing you can do right now is to take some time off, charge up your battery, get ready for a busy fall session, and then hit it hard. That's what I plan on doing. I'm going to be trying to take some time off over the course of the next couple of weeks. I don't see these conditions improving. Now, if we start to see some profit taking and we start to see some selling, then I think things could heat up. But there are a couple of price points that I think we need to be very, very watchful of. And we'll go back into the daily chart and we'll draw a couple of trend lines. You can see this one that I've already got drawn. That's actually an alert line. It comes into play right around the 325 level, and that also was horizontal resistance right through there. It was the prior resistance level, tested it, pulled back. So this becomes a significant support level. If by chance we crack down below SPY 325 and we've got some late day selling, long red candles closing on their low, and we break below this technical support, okay, then we've got something to look at in the course of the next few weeks. Until then, we're just going to be floating around here, biding our time, and stocks are not going to be moving very much intraday. So that's really all I've got for you. I could take a look at a couple of stocks, but if I show you something, then you're going to go, well, Pete said buy this, so I'm going to go buy it. I don't want to do that. I'm seeing some strength in retail. Do I like retail? Heck no. I don't like Macy's. I don't like Nordstrom's. I don't like Kohl's. I think all these brick and mortar retailers are in for a world of hurt. I think people have changed their spending patterns. And you can see these are all laggards that are bouncing here today. And as soon as they bounced, what did they do? Nice rally, rally, rally. Here we go. Right back down again. So these are herky-jerky, knee-jerk reactions. I've mentioned to you before that when the laggards start to catch a bid, it's usually a sign that the market is maturing, the market rally is maturing, and that we're due for a bit of a pullback. We've been seeing that for about the last week to 2 weeks. It's possibly setting up. So that's about all I've got for you. I just don't have anything to show you that's compelling where I would say you need to go out, you need to trade this today, and you need to get long. So I hope that, if nothing else, I hope that this video tempers your excitement, that you're able to go into cash, reduce your trade count, maybe completely, and not waste your capital. One of the worst feelings that I've had as a trader over many years, and I've gone through this curve, is you try and make something happen when there's nothing there, and you end up leaking oil every day. And then 2, 3 weeks after these really, really dull periods, you look back and you go, man, I wish I had that money that I had pissed away in a low probability trading environment, because now that conditions are improving, I would have that extra money to put into these really good opportunities. And those setups are going to come. All of a sudden in September, it's going to be like shooting fish in a barrel, because the volume's going to come back. You're going to have directional movement. You're going to have trades that you can get into and ride for a little bit. These moves, you get the initial move, it gets on your radar. As soon as you see it on your radar, they start to fade. And what we want is that initial move and that market tailwind, because then the stock continues to feel higher, and that's where we can make our money, is on that follow through. But there's no follow through right now. As soon as the market makes a move or a stock makes a move, it instantly reverses and there's nothing. So again, I hope that this video helps you to temper your trading activity. Thanks so much, everybody. Have a great weekend. We'll see you Monday morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.